on Wall Street. The S&P 500 and Nasdaq hit record highs for the third consecutive day, with inflation data coming in softer than expected. However, the indices pulled back as the U.S. Federal Reserve projected only one interest rate cut this year. This Reuters report gets you a lowdown on all the action on Wall Street.
It was another banner day for the S&P 500 and the Nasdaq Wednesday, with both indexes notching record closing highs for the third straight day. The latest inflation data showed consumer prices in May were softer than expected, and the Federal Reserve at the conclusion of its latest two-day policy meeting held interest rates steady. But the U.S. Central Bank projected only one interest rate cut this year, down from its previous prediction of 3, which led the major indexes to come down off their session highs. The Dow actually closed down 0.1%, while the S&P rose about 0.9, and the tech-heavy Nasdaq added 1.5%. Helping to power the market, Apple, which rose nearly 3% after announcing AI additions to its iPhones earlier this week. The company's market cap actually passed Microsoft's during the session, helping it reclaim its post as the most valuable company in the world. The continued market dominance of mega-cap tech companies is concerning, says Wealth Alliance President and Managing Director Eric Ditton.
3 stocks are now 20% of the S&P. Has that ever happened? No. That is as lopsided as we've been. And we know who they are. We know the offenders: Microsoft, NVIDIA, Apple. This is very much a two-tiered market. It's a narrow market. Advanced declines going the wrong way. New highs, new lows going the wrong way. I don't even want to talk to you about small cap stocks. Minus 4% a year last 3 years. So it's these big tech stocks that are carrying the day. How high do they go? No one knows.
Shares of Microsoft rose nearly 2%, and AI chip leader NVIDIA rose more than 3.5%, and Oracle surged 13% after it forecast strong revenue growth above estimates.